Welcome to the Schwartz Advisors Report from AftermarketNews. I'm Maddie Weiner, and I'm pleased to be joined today by Rick Schwartz, Managing Partner of Schwartz Advisors. Rick, thanks for taking the time to be with us today.
Glad to be here. Thanks, Maddie.
So, Rick, Schwartz Advisors has been involved in many aftermarket M&A transactions over the years. Presumably, Schwartz Advisors has a good handle on current and upcoming M&A deals. So from the outside, it seems like there is sort of a normal amount of M&A activity going on in the aftermarket. Is my sense correct on that?
Well, there's no such thing as normal. It really does change from year to year. I'll give you two quick examples. If you go back to 2021, the year after COVID, there was this huge influx of deals, over 500 M&A deals in the aftermarket alone that year.
Wow.
And a lot of that was due to the backlog of things that didn't get done during that COVID year when a lot of things were shut down. So that year, ton of deals. This year, 2023, not as many as 2021, but still a fairly good amount in spite of some of the overall economic headwinds, such as the interest rates. So really, I think the way to look at it is, does the M&A activity in the aftermarket seem somewhat normalized year over year? And how do we compare the overall aftermarket M&A activity to total aftermarket activity across all sectors? And in spite of some of the challenges in the broader economy this year, still seeing a lot of deals get done.
Yeah, very interesting. I know we've had a lot of press releases on different deals this year. So I did want to ask too, do you feel the M&A pace changes over time? Is that something that you've seen, or?
Yeah, good question. Certainly it does change from year to year, and it changes over time, again, due to some of the overall economic conditions. And you almost need to break it down into the really big deals, meaning deals that have values over 1 billion. And then there's a second category, deals that are maybe 100 to 200 million to a billion, and then the small deals.
Oh, okay.
I think the small deals tend to get done no matter what, and they're a lot easier to get done. The really big deals that are much more complicated, require debt financing to help complete the deals, those tend to slow down a little bit. And if you talk to some of the investment bankers, some of our colleagues and peers out there, they'll tell you that things have slowed down, but that's more on the big deals. On some of the smaller deals that are anywhere from, 5 to 10 million to maybe 100, 150 million in total value, those get done.
Oh, very interesting. So we're seeing right now, you're saying, a decline in those larger deals, but more of a steadiness in the small deals. Is that right? Or?
Yeah, definitely steadiness in the small to mid-sized deals.
Okay.
And small to mid-size is all relative depending on how you define it. But I would say anything that's really big, like over a billion or something close to that, there has been a slowdown this year because of interest rates. We expect that will start to pick up again next year. But then those deals that are below that threshold, they've been pretty steady.
Okay, very interesting. Now, Rick, you mentioned interest rates as something that affects, sort of the pace of M&A deals in the aftermarket, and I would imagine in general. But what are some other factors that impact the number of aftermarket deal activity at any given time?
I think when investors look at the overall auto and vehicle aftermarket, they're really looking at the dynamics. And investors are not just private equity. It's also companies in the aftermarket that are looking to grow. So they're looking at things like, how steady and stable is the VIO? What is the vehicle age? What is the price of gas? Because gas is an indicator that people will be driving. And if they're driving, that's going to mean more service work. So I think when you look at the consistency of some of the metrics in the industry, like I mentioned, that is an indicator that the investors will have confidence in the future prospects for the aftermarket.
Oh, very interesting. Okay, so looking at all those factors that we also look at, any business looks at, in order to forecast sort of what products they might need to be making for certain models, and Yeah, just different, I guess, economic indicators for our industry is really important, you're saying.
Yeah, and broadly speaking, there are two kinds of investors that we deal with. One is called the financial investors. That's the private equity. They're
Okay,
looking to buy
yeah.
something, build it, and eventually they're going to look to sell the company. So they're looking out 5 to 7 years. Do they think that the industry will still be healthy and stable where they can eventually sell their business or exit? Then
Right.
you have companies in the aftermarket that are looking for growth. They're not looking to sell what they buy, so they're looking to buy businesses that they believe have solid fundamentals that will grow for 3, 5, 10 or more years.
Okay, okay. So yeah, those two different segments are really interesting. And
Mhm.
I'm curious too, sort of to add on to that, which segments of the aftermarket are of more interest today by investors in your view?
Well, the way I would answer that, Maddie, is I think there's a lot of interest in all aspects of the service part of the aftermarket.
Okay.
And that's both with passenger car and with commercial vehicles, class 1 through 8. So we're seeing a lot of activity with tire dealers. There's been a tremendous amount of activity in car washes.
Okay.
Collision certainly has been really busy. So anything related to service is getting a lot of interest from investors. But we still see consolidation with distributors, whether it's traditional WDs or specialty WDs. And there's even been a fair amount of deal activity with suppliers. So it's across the board, but I think skewed towards service and maybe WD consolidation.
Okay. Interesting. And just to tack onto that, why do you think service? I'm curious. Like, what is so attractive for a company? Especially maybe private equity. I don't know if you see the majority of deals with private equity in that area, but why service? What's
Yeah,
the thing
yeah,
there?
yeah. Well, I mean, that is the fundamental question, and that really drives what the interest is. I think it goes back to what we said earlier: the VIO, the vehicle miles traveled, but also there's this word you hear a lot in our industry: fragmentation. So you've got a lot of really good service providers, but they're fragmented, and there really aren't national chains. There's a lot of big regional chains. So some of the investors might look at that and say, if we've got a 5 or 10 shop that's really well run, can we scale that up to 50 shops or 100 shops?
Oh, okay.
So I think the fragmented nature of the industry is going to be around for a long time, and it's about making something that's maybe a little bit bigger. And the bet is that it'll be more efficient, and maybe they can lower some of their expenses if they scale the business up. They being the
Yeah.
investors.
No, that makes a lot of sense. Yeah, that's interesting. Now, I'm curious, getting back to sort of the segments of the aftermarket, have you seen certain segments change over time in interest by investors?
Um, I, Not really. I mean, I think the interest, we haven't seen interest waning. WD consolidation has been going on for a long time, and there's still a lot of WD activity. It might slow down a little bit, but there's opportunities for more consolidation. We've actually seen upticks, whereas 10 years ago, there wasn't as much deal activity in service as there is now.
Okay.
Um, and even quick lube, which a lot of people think is going to go away because oil change intervals are longer. Um, there's more electric vehicles on the road, even though there's not that many in the overall VIO. There's still deal activity in quick lube. So it's pretty exciting to see how the aftermarket has held up over time.
So, Rick, do you have any businesses now that you're actively
Our team has been terrific at developing relationships with clients, and we do have a couple of uh, deals that we're working on. But out of respect to our clients who are selling the business, we don't talk about anything that's in process, and we look forward to making an announcement when the deals get done.
Great. Well, Rick, thanks so much for sharing your expertise today. We really appreciate it.
Thanks, Maddie.